Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again in the gold market. So you could see that, returning back to things that we have said on the weekend, we said market need to confirm the bearish scenario. So if it will drop below the grabbers, we'll raise it. So it will be at least something that could let us to think about the taking the short position. That could mean that we could go first back to the lows, somewhere to the 19 even area. But as you can see, the drop was not too far from the low, since it stands around the 1918, 1910 area, some support area. And at first glance, it seems that chances on the butterfly is still possible. And when you see this kind of picture, it's not really simple to make the decision on the short entry. Although major components of the direction we already have. So grabbers have been erased, trend has turned bearish. We have the bearish context on the daily. Here we do not have any support areas until the lows, and even, I suppose, even below these lows we also do not have any supports because the 618 level has been broken by this retracement. Meantime, market still stands in a wide triangle, and probably its breakout, the downside, might become the next confirmation of the bearish context, as you can see. Let's already discuss this pattern. On the way down, it was butterfly has been formed, and market has almost reached the COP target right in the lows of the border. And from that standpoint, mostly we have the same setup as on the euro currency. There we have the bearish context, and on the gold market we also have bearish context. So on the euro currency, market stands some completion target, some support area, and here we have as well. And on the hourly chart we have very similar situation. If on the euro currency we are watching for 106.30 pullback in confluence, on the gold market is the same confluence with the 1920, 1924. So conclusions absolutely the same. For the very short term, current short term context, market has to stay below the confluence and should not return back up to the 1930 area. If this will happen, as you understand, this potentially open road to appearing of the hand and shoulders, because we have the butterfly already in place, moving to the 1930 with the neckline here, and possible stronger upward extension or even continuation with the daily pattern. So if market will break through the confluence, it will trigger the chain of consequences for the performance. And that's why, if for position taken here, we should not consider too far standing stops. Just watch for this confluence. So if market will show the pullback here and we take the short position, we need to control the performance around it. Upward breakout means that probably short-term context is not valid anymore, and it will be better to close the position. If everything will be okay and market will just restart the downward action, it means that the bearish context is still valid, and we should be ready for action somewhere back to the 19 even area. So that's in two words what we have on the gold market right now.